Hey gang, welcome to Friday. It's the Hash. We're ready to do this thing. I'm Zach Seward. I'm an editor at CoinDesk. I'm joined by Naomi Brockwell, Ben Powers, Jen Sanasi, and special guest star Nate D. Camillo. Welcome everybody. You guys ready to do this thing? Naomi,
Let's do it.
Take it away. Let's go. It's
All
Friday.
right, we're starting off with some Binance news. So Binance faces CFTC probe over US customers trading derivatives. So a report came out, and apparently the agency has brought an enforcement action, is started a probe into Binance. Now, this is similar to what we saw them doing when they brought an enforcement action against BitMEX last year over allegations that they too were offering derivatives trading to US customers. That is an ongoing case. It's interesting. Binance does not serve US customers directly. They actually use a different company under their umbrella, which is Binance US. And many times the parent company has announced that they will be kicking off US customers from their platforms, but it hasn't really happened yet. And so it's interesting to see what's going to come of this. Clearly, regulators in the US are trying to funnel customers into regulated channels. But I want to talk about this in terms of something a little bit different and throw it to the group, because clearly people are choosing to go to Binance. There's probably more liquidity there than there is when you're trading CME futures, which is the derivative that's offered in the US. So it makes sense that people want to go where the best product is. Obviously, the US is trying to curtail people from doing that. And we saw a similar thing happen in Japan, actually. Japan famously didn't offer futures trading, right? And so everyone went to Singapore who did, and they hence became the financial capital of the world along with Hong Kong. And there's no reason why Japan should have given up that title. They could have been the financial capital of Asia, right? And instead, Singapore and Hong Kong took that. So I'm just wondering, is the US, with all of their regulation, are they ceding that title to somewhere else? Are we pushing business out to the rest of the world? What are your thoughts? I'm going to throw to you, Nate.
Yeah, Naomi, this makes me think about the story that Jeff Roberts told in his book Kings of Crypto about Binance kind of outmaneuvering Coinbase early on by actually staying out of the US. And also by just trading purely crypto, having no fiat on rails. They didn't have to deal with banking issues. The thing that I find interesting is just this is another example of how slow moving US regulators are and how little guidance they can give at times. So I bet Binance, it's kind of sad. I bet Binance is a little bit, hurting from this in terms of wishing maybe they had waited a little bit longer before offering US products. I know CZ had mentioned during the course of that story being reported that that there are often users that find creative ways of getting around the kind of barriers they put in place, illegal trading. It's kind of unfortunate, and I wish that the CFTC and others would have kind of worked a little bit faster, maybe to give Binance more, kind of clarity on what to do here.
Yeah, I think it's not just a clarity issue. Sorry, go ahead, Jen.
I was just going to say, if we zoom back, what does this mean for people who use Binance? Like, what does this mean for them? What should they do?
It's a great question. I know a lot of people who use Binance who are based in the US because it's the best platform to go to, let's be honest. And so they are finding creative ways, as you said, Nate, to get around this. And I on the side of the consumer. I feel bad for them because they're going to lose a really valuable tool in their toolbox in terms of interacting with the crypto world. Binance is a great exchange. They have lots and lots of options, like more pairs than I think anyone. And they are really a go-to place for derivatives, especially now that BitMEX has been hit. BitMEX prior to that was one of the largest places where people go to trade derivatives. So, I do feel bad that this wonderful free crypto world that we envisioned is slowly starting to clamp down and be made unavailable in certain ways. But we'll have to see what happens there. Zach, what are your thoughts on all this?
I mean, I think it's great that this came out one day after Binance announced that it hired Max Baucus, a former U.S. senator, to lead up their government relations work. So, maybe they knew this was coming. Maybe they anticipate that similar, probes are likely. But again, there's no accusation of wrongdoing here. But I think the regulatory clarity also comes with regulatory investigation, and Binance is clearly trying to get ahead of that and ramp up its efforts to tell its story to regulators, so that maybe some of these laws can be mutually beneficial to both consumers who in some cases do need protection, and businesses who are innovating new financial forms. So we'll see what that hire goes to. But yeah, I thought the timing was interesting, to say the least.
Yeah, I think the timing makes all the sense in the world there. And just sort of, this feels like par of the course for any bull market, right? Like as increased attention and scrutiny and popularity comes to crypto more generally, regulators are going to be right there as well. We saw a similar thing happening in 2017 during the last kind of peaks of some of the runs. So this is just an ongoing dance, and this is just kind of the next round, it feels like to me.
Yeah, I agree. And I'm just going to go back to what I said at the start. It does make me sad to see it, because although we talk about this in terms of protecting consumers, I do feel like the government stepping in and telling people what's in their best interest and not letting them make their own financial decisions. I feel like it infantilizes people. And maybe if they feel like they've researched enough, they should have the right to make their own financial choices without the government stepping in and stopping them. But let's change track and go to something a little more fun. Ben, what have we got?
Yeah, speaking of people, let's go to all the Beeple people out there. We had the eminent digital artist on First Mover this morning at 9 a.m. Here's what he had to say.
Work, but they own the right to sort of show the work. And I think it's also one of these things where I'm going to sort of work with the collector to display this stuff in the real world, because as much as they bought, just a JPEG, how do you want to display it? I can make a big print for your house. We can project it on the side of a building for Art Basel. That's the advantage, I think, of digital work, is it can take a bunch of different forms versus a painting. It's just a painting, and that's it. It's never going to be anything different than that.
Have you been in touch with the owner? Do you know who it is?
I do know who it is. It will be announced quite soon. I think it's a bubble. I do think there is a bubble, and I think where we are at in that bubble, or if it's not a bubble now, I do believe it probably will be a bubble at some point, because there's just so many people rushing into the space. Just like with the internet, there was a big bubble. Everybody was super, super hyped about it, but it didn't kill the internet when the bubble popped. It just kind of wiped out all the crap. And so I honestly think that's what's going to happen with this. Yeah, I probably will keep a percentage of it in Ether. I don't know that I'll keep all of it in Ether. How much of that? I'm going to be honest, I haven't really given it that much thought. I probably should, though.
So I just thought this was super interesting. There were so many juicy tidbits in this interview. And in fact, I watched it and I was complimenting, our host, the First Mover. And Zach said, Ben, you ready to write this up? And so that's what my morning has been doing. But before I dive in, what were you all's thoughts? Zach, you edited this piece. Tell me what you got.
I can confirm that I did it to you, Ben. Sorry for dunking on you in the Slack channel earlier this morning. And thank you
I
for
love NFTs,
so
right?
No, this piece was great. I'm all in on the Beeple story. I just got word from one of our colleagues that Christie's is going to announce the buyer within an hour. So this mystery will soon be solved.
So excited.
All right.
But yeah, I'm all in. I mean, the Beeple story is just such good entertainment, from the crazy auction price to the misreported buyer that it was Tron founder Justin's son, which CoinDesk was first to correct yesterday afternoon, to now the anticipation of the announcement here. So it was cool that he was on CoinDesk TV, and again, really going into detail about his thoughts on this, being candid about the bubble, but also being hopeful that this thing has legs beyond what he called its irrational exuberance at the moment. So I'm all in on the Beeple story. I love the Beeple story. The guy seems cool. Congrats to him. I'm really excited to find out who the buyer is in a matter of minutes now.
Yeah, that was what really struck me. Look, we know that I have not been following the NFT story closely. I was all out on them last week. I've come back into them this week. Y'all have been seeing it in the Slack channels, this emotional roller coaster that I am riding in this regard.
I've been watching it with popcorn. What's he going to do next?
Exactly.
Is he, no, he's crying. Ben's back to crying again.
Exactly. But I do think, what I really liked about this is not only, this guy was incredibly self-aware. And I think that was so important for me, kind of seeing behind the scenes here. And I really loved the discussion about, what are all the different forms this digital artwork can take? You know, he said it on First Mover. He's like, well, I could do like a big print for your house. Like I could project this onto a building at Art Basel. And like, once we start experimenting with that, I think this idea of this being just a JPEG or something like that becomes a lot more murky in a good way. And we start to see all the different variations and mutations that this artwork can take. You know, and not only that, just being aware that he says, yeah, like this could be a bubble, but that's okay. Like NFTs are going to have further staying power beyond this. And I think, you know, with a lot of different things, this is just part of the maturation process, it feels like. But I thought this interview was really illuminating, and there was a lot that we can glean from the larger NFT landscape here.
I want to just chime in and say, like, so the owner doesn't own the copyright of this. He just owns the right to show this. That is mind blowing to me that someone would spend $69 million and not own the copyright to this. But I guess that's how art works. I don't know.
I just wanted to jump in. I was thinking about the NFT craze this morning, and it reminded me, I was in an incubator for the startup that I co-founded, and we were talking to a VC about creators wanting a line of sight into where their work goes and wanting to make money off of future sales of their works and claim ownership over their work. And this VC told us that nerds making memes in their basement don't care about monetizing their work. And I just think that person is dying right now with everything that's going on.
Absolutely.
Yeah.
No, that's an interesting thing about the NFT world is that depending on which platform you put your work on some platforms, the creator of that will always receive a percentage of the sale as it gets moved from owner to owner. And I really like that. I hope that moves to different platforms. Jen, I know that you work in specifically that industry in terms of like music and making sure that creators get some portion of future sales. I think that's a really cool development.
One other thing, Ben, that he mentioned that this was, he thought it might be a bubble. I was talking to one of our senior reporters, Brady Dale, about this a couple of weeks ago, and there may not be enough liquidity yet in the NFT market for there to be a bubble. I'm not sure what a correction would look like. Although when it does become a bubble, eventually that is, bubbles are a sign of a healthy market. So it'd be interesting to see how a bubble would actually impact NFTs, if it pops, and what would come out of that. Like you rightly mentioned, the internet.
Yeah,
No,
I mean, there are NFT fractionalization platforms and other sort of interesting marriages of finance and NFTs that are super interesting and have sort of juiced some excitement into this marketplace. I mean, he even mentioned that he mentioned this morning that some of his works have been fractionalized in the past, and some of these tokens are trading interestingly across the markets. So yeah, I would be curious to see what comes of it. If there is some sort of financialization of what Naomi said, this face melting investment, if there's a way to financialize it in some way, shape, or form, might be the next step here.
Yeah, and I think, Naomi, to your point about the copyright law and not having the copyright rights to this as part of this purchase, I think what's really interesting there is we're just getting more clarity, right? Like around NFTs and about the legal structure that's emerging to sort of keep up with them in some ways. I know, CoinDesk has been doing some reporting, Nicholas Day in particular, looking at all the legal implications here and talking to lawyers about things like IP and copyright might be factored into this. And so I think, as part of this ongoing conversation around NFTs, this is going to have to be a key thing that we keep our eyes on. And, people being explicit with it just really makes it more clear. And I think this is kind of the barriers the benchmarks that are going to have to be hit around a lot of future purchases going forward.
All right, I'm taking it. Let's go to break. After break, we're going to talk about rising bond yields. And Nate is going to tell us why that matters for Bitcoin. Stick with us. Bye.
All right, guys. So 10-year Treasury yields are pushing over 1.6%, reaching their highest levels since February 2020, before global markets came to a halt in the wake of the COVID-19 pandemic. what does that have to do with Bitcoin? So right now, low bond yields have meant that investors have been searching for yield, which has created what some people are calling asset bubbles in Bitcoin, real estate, and the stock market. In normal times, the Federal Reserve might roll back quantitative easing, or they could lower interest rates, but they've made it clear that they don't want to do that because of the sluggishness in the labor market. There's been lots of defaults on loans, closing businesses, that destroyed wealth, creating deflationary pressures. Now, the bond market knows that some higher inflation is coming later this year when everyone's vaccinated. Everything reopens, people feel a lot more confident to go and spend the money they've been saving while we've all been stuck at home. Those rising bond yields have roiled some over-leveraged investors in the stock market. You've seen some tech stocks take a hit when those bond yields hit 1.5%. Bitcoin, however, was not hurt by it. Bitcoin is now seen as this kind of inflation hedge and a risk asset at the same time as it holds steady even when bond yields rise. Though we're now hitting new records since February 2020 for the 10-year Treasury bond yields. So I'm curious to know, what do you guys think in terms of what those companies that have been investing into Bitcoin because of inflation worries, like Tesla, MicroStrategy, Square, and if they'll continue to pile into Bitcoin, despite the safer bonds increasing their yield?
I think that's a great question, and it sort of speaks to the changing perception of Bitcoin in these companies' eyes. So as you explained, Nate, people are searching for yield, right? Less people are buying bonds, so yields are rising, and people are probably worried about inflation. That's why less people are buying bonds right now. They just really don't trust them. And so when people are searching for yield, like as you said, historically you go towards like riskier assets and things, but Bitcoin is perhaps no longer being seen as one of these risky assets. It's being seen, as you said, as an inflation hedge. So I wouldn't be surprised if this encourages, like this economic uncertainty encourages more people to get into Bitcoin rather than less. But it is interesting. We're seeing gold dropping at the moment. Gold has traditionally been that hedge for people, and yet we haven't seen people piling into it. I'm wondering where they're going, and are they all just going into Bitcoin right now? Are they using cryptocurrency as a more sure thing? It's a really interesting phenomenon that's coming on. Like, I never would have expected that gold would be dropping at this point in time, but here we are, and Bitcoin's doing great.
Yeah, I think it's interesting, I think the companies that are currently in Bitcoin, as we see with MicroStrategy, are just going to continue to possibly double down on it, as a hedge against some of these things. But one thing that feels notable, particularly in this environment, is that it feels like for maybe a month there, when we saw the previous all-time highs get hit, we had kind of a few weeks of just company after company after company really piling in here, and we saw these institutional buy-ins. And it feels like it's been a little quieter on that front over the last month. Maybe I'm mistaken in that. Nate, correct me if I'm wrong. So have we reached maybe a pause point in companies getting into the Bitcoin market generally, particularly as a hedge?
Well, MicroStrategy certainly hasn't stopped. We, at all-time highs, they're still piling in. They're like, never gonna stop.
I think they put another 15 million in today.
I know, that's mind-boggling, but yeah, people are really worried about all of the money printing that's going on. And so, I'm really glad that now this time we have money printing, we have Bitcoin as an alternative. In 2008, we didn't have this. And that's really why Bitcoin was created, because people wanted an alternative. And now that we have an alternative, seeing that flight of capital into the crypto space is really interesting and exciting to watch.
Yeah, Ben, it feels like these kind of announcements come, they kind of they usually come all at once. You see, a bunch of institutions announce at once. I was talking to BitGo when they had announced that they had held a bunch of Bitcoin on their balance sheet since 2014. And they were talking about just how long it takes for institutions to kind of get the buy-in, and talking to boards and whatnot and getting them to kind of move in this direction. But when it happens, it happens all at once. And it'll be interesting to see, because there are some, there are other reasons why you might invest in Bitcoin as an inflation hedge because of hyperinflation that you might be seeing in Lebanon or Venezuela. There are some economists that talk about this asset as kind of something that like investors see as a hedge against global inflation risks, in addition to U.S. inflation. I know we have such a heavy focus as we're all based in New York, but that's also something to keep in mind is kind of what we see in places that had less stable economies, less stable financial systems, going through this terrible pandemic.
Yeah, I noticed also that Steve Forbes just put out an article where he's getting more and more bullish on Bitcoin. I interviewed him maybe like 4 or 5 years ago about it, and he was like, well, I like the idea of competing currencies, but Bitcoin isn't it. We need something that's stable, and it needs to be like a yardstick. And now it seems that people like him are starting to look closely at this because of all this institutional buy-in.
I was curious, Naomi, I feel like for a long time there was a discussion around Bitcoin as something that was more interesting for the fact that it couldn't be touched by governments and it was like anonymous transactions. And obviously that use case is still very much alive. But like, when did you first see this kind of inflation hedge narrative turn up?
I think this has always been the case for a lot of people, especially if they come from an economics background, especially an Austrian economics background. The idea of a monetary policy that isn't at the whim of government officials or bureaucrats is really important to people. They want financial sovereignty. They want control over the future of their assets. And when you can, as we mentioned before, and as you mentioned, Venezuela, if you just wake up and suddenly all of the value of your money's disappeared, I think that's always been on people's mind. And so since the bailouts in 2008, people have been thinking, well, how do we get around this? How do we create an independent money? And now we have Bitcoin.
Yeah, I think we're really spoiled here because we're here in the kind of a place where our dollar is the world reserve currency. So we don't know what it's like in other countries.
And let's change track. So Jen, what's been going on in the world of Robinhood?
Okay, well, it is Women's Month and International Women's Day happened recently. So this story is all about the ladies. Robinhood reported that the number of female crypto traders has surged 7 times since the end of 2020. And they said that 40% of active female users on their platform are trading crypto. So this is kind of opposing some of the lines we saw earlier this year that said that there weren't a lot of females in crypto and it wasn't a female-friendly space. Naomi, I'm going to throw to you first, obviously, because you're the other woman on the panel. But we hosted a Clubhouse chat with some other hosts last night on Bitcoin for Beginners. And I thought that there was an equal amount of females who participated in the conversation and who were interested as there were males. And so I just want to talk about what you've seen in the industry. You've obviously been in it longer than I have. Do you think this narrative that that crypto isn't a female-friendly industry is one that has been true to you?
I think that's a great question. If you're asking whether or not I felt welcome in this space or whether I felt any prejudice against me being a woman, absolutely not. I think it's wonderful, and I've never met such a group of focused people on this philosophy. Like, gender for me has never really come into the conversation. But maybe some people have felt, or maybe they're uninterested in getting involved with crypto, or maybe they've felt like overwhelmed. Like, there are lots of reasons why people might not be getting involved. Sometimes, especially with men and women, you see like big divergence in the types of activities that they participate in, types of fields they go into, and all of that. So perhaps in that regard, maybe the narrative around Bitcoin, maybe we just haven't found the selling point for certain demographics. Maybe we just haven't found the way to say, hey, this is why this is valuable for you. And maybe more women are starting to see that value proposition because the narrative is being reframed. So that's great that more people are getting involved. The more people in crypto, the better, in my perspective. Ben, what are your thoughts on all of this? Sorry, Jen, you were about to jump in.
Yeah, no, Ben, go for it. I'll jump in after.
No, I mean, I think it's interesting, right? Like, it's obviously great to see these numbers increasing. I think, a retail crypto app like Robinhood makes it a little bit easier and lowers those barriers to entry. I do think sort of the when we talk about any welcoming environment, you have to look at the spaces in which people congregate. And I think, I spend way too much time on Twitter as part of my job, but that's the reality. And you do see sort of, and this is held up in crypto, like the sort of OG status, like your tenure in it is used to sort of wield clout in a number of ways. But on any social platform, you're going to have, people dunking on each other. You're going to have jokes. You're going to have context collapse and all these other things. So, I think that in every industry, in every area, there really is sort of elements of harassment, elements of discrimination, and these things are not native to crypto, but I do think that the platforms on which people congregate, like Twitter, like others, do really foster this, unfortunately, sometimes, and that just is a larger social media dynamic that we need to grapple with. So that's maybe my 2 cents on this one.
Yeah, and I definitely add that I'm not sure that's gender specific either. People are dunking on each other all the time. Most of my interactions are just me watching 2 people go at it, like regardless of whether male or female. It's kind of enjoyable that way, but it makes it such a cesspool, right? But we love it. That's why we're there.
It's like but if you're watching from the inside and you're like, well, I value my mental health and general health and well-being, why would I want to get involved in that? So that's the perception that I think people might butt up against you when it becomes like a dunk fest rather than an educational opportunity, I think is where it gets tricky here. But Jen, you were going to jump in previously.
Yeah, I was just going to read some stats. I mean, we're talking about the industry maybe not being that female friendly, but if we look at some stats, like Grayscale published a report that showed 43% of Bitcoin investors were women. That was in 2019, I believe. CoinMarketCap said the number of women in crypto increased by 43% in the first quarter of 2020. I use the words female friendly, but it's like almost like I've been conditioned to say that, because what is a female-friendly industry? Are we saying things need to be easier to use for women? Because I don't think that's the case. I think, women are capable of understanding things just the same as males. So I don't know, maybe it's just a narrative shift.
Yeah, I definitely think it's an interest thing as well, because I agree. I hate that narrative of like, let's find ways to bring them in and handhold them and teach them, because the men didn't need the teaching, but the women do. Let's just up that education. I think at the end of the day, maybe the same education's going out there. Some people find it interesting, others don't. I think that's totally fine. Like, we talk about sports all the time on this show, and I do not participate. You will notice I will never participate because I don't care. And it comes down to like an individual preference. Sometimes you can, say that applies to whole demographics. Sometimes you just got to treat people on an individual basis and figure out what their value system is.
One other thing to consider here is that in addition to, like, with culture is one thing, but men, especially in the United States, have way more discretionary income than women do. And when you're thinking about Bitcoin and what you're doing with Bitcoin, for most people, it's around like 2% or so of their investment, like portfolio. They're playing around with Bitcoin. It's a high-risk asset. They want to, earn some yield. So it is good to see women coming in more into the space now, so that they can share in the wealth generation that Bitcoin provides.
Yeah, this doesn't feel just like a uniquely crypto thing. This is like a whole financial dynamic that needs to be scrutinized more closely, I think. Right. But when I was a reporter at American Banker, we would look at the same thing, women in banking, and kind of trying to advance that in the executive field.
Yeah, well, let's go take a break there. Coming up after the break, we're going to be talking about risks to watch out for before investing in Bitcoin or Ether. More details on that to come.
All right, we are going to turn now to a piece from our colleague, Christine Kim, who works in our research unit. The research team at CoinDesk put out a great report called Bitcoin and Ether, an Investor's Perspective. And I thought Christine did a really nice job of highlighting some of the risks of crypto investing, for those people who might be entering the space for the first time. So I'm just going to go through the 3 key risks that she highlighted, and then we'll jump into an engaging conversation. The first one is regulatory risk. The second one was technological risk. And the third one was competitive risk. and she breaks it down in detail, looking at the various aspects you want to consider before making an investment in this space. I guess I want to throw it to Naomi again as sort of our most seasoned crypto trader, and I wanted to get your tips and tricks. Seasoned, respected crypto trader Naomi Brockwell. Talk to me about some of your tips and tricks for how to assess risk, especially from a newcomer's perspective, right? What's the one like red flag or two that you want people to be aware of, before they put their money into these assets?
Sure. And Jen and I actually spoke about this last night when we hosted a Bitcoin beginners chat. And we had lots of questions about that. People asking, how do we get involved? What wallets to use, what exchanges? And one big red flag that came up to me was someone mentioned how do they choose which platform, in terms of getting them the most yield, because they have all these people reaching out to them, offering them different percentages. How do they choose the best ones? And I was like, whoa. If people are reaching out to you, offering you trading advice, or investment tips, that don't do it. None of them. Do not choose a single one of those. Like we talked about scammers before yesterday, Ben. We talked about the amazing article you put out with all of the fake apps in the App Store, and there are just so many. So I'd say the biggest thing people need to be aware of is thoroughly understand what you're getting into. Even if you've heard the name Tracer and you think that it's great, you're like, I'll download the Tracer app. Tracer doesn't have an app. They're scammers who are putting those things out. So until you feel like you're very comfortable in the space, just don't put money in. It's a dangerous world out there. I have imposter accounts all over the place. There are YouTube comments with my name and profile picture, Twitter accounts, Instagram accounts. They reach out to all of my friends, and some of them fall for it. And it's really devastating to see that because they'll say, hey, they'll chat as if they're me. They'll give them advice, and then they'll say, hey, go to this website. I have this code. You're a friend. I really want you to benefit from these perks. And so be aware of that when you're getting into the space. I think that's the most important thing right off on the outset. Ben, what are your thoughts?
Yeah, I mean, the kicker for that piece that we talked about yesterday was like, if it seems too good to be true, like it is. And I think you can really, we talk about the unique value propositions of crypto and a lot of other things, but that doesn't mean that you should like abandon sort of the real world logic of some of these opportunities and stuff like that. Like do your research, do all these other things, and make sure that you like take it slow. That's okay. Like crypto should not and is not kind of a get rich quick scheme. Like it really needs to be treated as an investment, as something that you work to understand, and as something that you incrementally go into, right? Like, we hear all these stories about people getting rich from like investing in Bitcoin in X year, and stuff like that. But that doesn't mean you need to do the same. Like there's a whole lot of other areas to take into consideration. But something that stuck out to me here was, Christine mentioned the regulation as one thing to look at, the technological aspects to another thing to look at, and then the competition, which I thought was interesting because so many cryptocurrencies have open source code and things like that. And we see, various altcoins spun up in a variety of different ways. She said that that's a possibility, but really pointed out that given the network effects for Ethereum and Bitcoin right now, it's unlikely we're going to see a huge competitor to those two chains in particular. And that's something that I thought was curious. Like we're starting to reach that network effect with those two prominent cryptocurrencies most generally, where they aren't going to have a competitor in their own asset classes. So that was a point of this report that stuck out to me.
Well, the scourge of... Yeah, go. I wanted to throw it to Jen because I saw your hand go up, and I really want to hear. I hope this is a nice segue, and if it is, if it's not, just tell me I'm wrong. But I really want to hear from the Clubhouse chat, like some TLDRs from the Clubhouse chat that you guys organized last night. I know it was like I know you went for like a couple hours, so I'm wondering if there's any sort of insight from that you can share with us.
Well, I just actually wanted to riff off of what Naomi said, and it kind of brings us back to the Clubhouse chat and caution our users, because Naomi, you're talking about your accounts being cloned and replicated, but I've noticed in our comment section that the same thing is happening to CoinDesk, and accounts that are saying that they are CoinDesk are responding to comments and trying and essentially giving people advice that they should not be taking. So just want to caution our users on that. And Naomi, correct me if I'm wrong, someone in the Clubhouse chat last night around regulation brought up the fact that is it possible that we could wake up tomorrow and Bitcoin could just not exist due to regulation? And I want to talk about the likelihood of that at this point.
Sure. I mean, that's a great question. It's always brought up as like this fear. It is absolutely possible the government might come out with really stringent regulation. It's very possible they could say, Bitcoin is banned. Is it likely? I think at this stage it's not likely, but it's possible. Is that going to kill Bitcoin? No, it's not. Because you have this global phenomenon. You have all these different jurisdictions, choosing their own policies. And although the long arm of the US law reaches far and wide, and they tend to dictate a lot of policy for the world, you are still going to have countries that will choose other things. And so as long as that exists, I think Bitcoin itself is always going to exist. Even if it moves back to the fringes where it first started off, it was very, very useful on the fringes. So I don't think Bitcoin is ever going to go away in that regard.
On that note of Bitcoin as the post-apocalyptic cockroach, I think we will end the week of the hash. Another strong 5-day showing from us. Well done, everybody. Thanks, Naomi. Thanks, Ben. Thanks, Jen. And thanks, Nate, for filling in for Will these last few days. We'll be back on Monday for more discussion of crypto news and culture, and we look forward to seeing you then. Have a great weekend.
Bye.
Have a good weekend.